Hey everybody, this is Patrick Zielbauer from Infinity. Just want to do a quick sound check and then we're going to jump right into it here. Okay? Can everybody hear me okay? All right, great. All right, folks, trading futures, options on futures, and retail off-exchange foreign currency transactions involves substantial risk of loss and is not suitable for all investors. You should carefully consider whether trade is suitable for you in light of your circumstances, knowledge, and financial resources. You may lose all or more of your initial investment. Opinions, market data, and recommendations can change at any time. Past performance is not indicative of future results. So, folks, only fund a futures account with risk capital. Okay, that means money you can afford to risk without lengthening your retirement horizon, affecting your ability to pay the bills, and so on. If you have any questions about where you may fall on the risk capital curve, so to speak, please do contact your rep in our office here. Everybody here has one, regardless of whether or not you are a live client or not. All right, we're happy to talk to you objectively when it comes to risk. We do it all the time. All right. Okay, so we do a presentation every Monday. My name is Patrick Zielbauer, and I do this presentation on Sierra every Monday that talks about basically a different aspect of Sierra chart. And over the last few weeks, we've been talking about this order flow stuff a little bit. I thought I would try to continue down that path a little bit while also trying to highlight some functionality related things so we could teach people about some of the cool things you can do with Sierra. But that's what the game plan is. We are going to focus on the order flow stuff and these two chart files that we have up here today, which I'll explain in a minute. And then also I want to make it clear that anybody who wants a copy of the files that we're going to be using today, whether you're a client or not, especially if you have a demo account and you just don't even know where to begin, or you want something you can work backwards off of, in addition to the videos and using your reps knowledge and that sort of thing, let us know and we'll just send you the file. Okay, it's totally free. We'll email them to you, give you instructions on how to access them. It's totally free of charge, no strings attached, and all you need to do is either have a demo or a live account with us to do that. All right. Okay, so let's talk a little bit about this whole concept briefly before we get into the nitty gritty with this charting, this chart that we see up here, and let's just briefly summarize what it is traders are generally looking for when it comes to order flow. So order flow is basically, in summary, it's the type of analysis that people are using to make trading decisions based on largely the relationship between bid volume and offer volume. So an example of bid volume would be like if you mash on the keyboard, or your mouse, sell market, sell market, sell market, you're hitting the bid. That is recorded as a bid trade. Okay, and that is treated differently from an analysis perspective than a trade done on the ask or the offer. So the other way around, let's say you're dying to get long, you're hitting buy, 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 or you're short and you're trying to get out, so you're hitting buy, 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 buy. That is an ask trade or an offer trade, okay? And so what happens is when the CME pushes trade data out to the collective user base, it notes what kind of trade it was. A lot of times you've seen this in time and sales windows where it looks like the tape, ticker tape reading, and it's like red, green, red, green, red, green. That is the exchange telling us whether trades were done on the bid or the ask. You don't know if somebody was getting out of a long trade or if someone was getting long the market or getting short. We don't know the motivation behind why someone was doing what they were doing. All we know is that they were selling the bid or buying the offer or vice versa. And so what traders are seeking to do, generally speaking, is they're trying to find relationships between the market moving like in the next few seconds and what is often referred to as the delta or the difference between the bid volume and the ask volume. So over the course of the last few weeks, we've talked about some different things that you can do inside Sierra to track this info. Now, why have we been focusing on this? Well, we've been focusing on this because A, people are asking us for information about it, and B, there's also a lot of nonsense information out there about it. And I don't want to pretend like I have some magic insight as far as whether or not this is a good style of analysis. I have my significant reservations about it, in fact. And one of those things is that people who are selling information about order flow are charging lots and lots of money. So that kind of makes my spidey sense go off a little bit as a salesperson and as a risk manager and someone trying to represent my customer base and maintain their interests and that sort of thing, is when someone's selling, these courses or indicators that appear to be make things so easy or simple, that is a bit of a red flag for me in a lot of times. Not all the time. I mean, but there are certain situations where we've seen these order flow add-ons for, that are for sale for another company that we sort of compete with from time to time that starts with the letter N, okay? And the prices are really, really crazy. I mean, $7,500, $10,000. And when I start to see that, we try to remind people that you don't necessarily need to buy very expensive add-ons to do a lot of this stuff. A lot of this stuff exists inside our charting program. Now, there are some really good add-ons for Sierra that people have built that do cost money, okay? We're not saying that we don't have a hand in, helping people create indicators and sell and distribute them. You can do that in Sierra. It's just not as done on such a wide scale. And there actually are some really cool order flow add-ons that are a lot more reasonably priced for Sierra than we've seen with some of our competitors, okay? So I'm not saying don't buy stuff. I'm just saying don't buy stuff thinking it's going to be the be-all, end-all. It won't. Okay, all the same stuff is going to apply that applied before, and that is your decision-making ability, why you can make money in the simulator and not the live account. Don't forget to address these things. They're not going to go away. All right. The other part of order flow stuff in general is that order flow traders tend to be drawn towards this type of trading because it seems kind of fast-paced. So what that tells me a lot of times is that the customer has an innate need to receive instant gratification. That's not a good combination with futures trading and leverage. So maybe it's not the order flow that's the problem. Maybe it's the customer just kind of following his or her path towards whatever suits his or her personality, and that just happens to be more destructive. All right, that's the chicken or the egg sort of thing. Order flow trading tends to be a little bit fast-paced trade, more fast-paced. I don't see people doing order flow on like a 60-minute time frame. It's usually on a really short time frame. So a lot of the charts that I show, even though I tend to not want to show this type of short time frame, are on these short time frames because that's what people are asking us for. All right, so bear in mind all these things. You have to put this through your own prism, what is appropriate for you and what's not. All right, and we're going to try to be as objective as we can about this. All right, Lance, yes, sort of. Right, and I got your email, by the way, and I'll be back to you as soon as I get a second. Okay. Anyway, so what I want to display, here's how we're going to do this. I'm going to right-click on the chart and show you the studies that are on the chart. I'm going to explain them really fast, and then I'm going to go into depth on the stuff that I think needs more explaining. Some of it really doesn't, okay? But before we do that, just look at the screen for a second. This is the NASDAQ, and then I have the same exact study with one little modification, which we'll talk about in a minute, on the S&P right here. So same studies, one's NASDAQ, one's S&P. Firstly, just look at the graph, okay? There's no candlesticks except for the hollow bar or the hollow ones you see right here. That is because this is a numbers bars chart, and we have replaced effectively the candlesticks with a volume profile. So the numbers bar study in Sierra is basically like what some people call a bid-ask volume style chart or footprint style chart is some circles. And the cool thing about the numbers bar study is that you can display the data in different ways. It doesn't have to just look like a candlestick. It doesn't have to just look like numbers inside them. You can actually display the data as a profile. So a lot of people who are interested in this type of trading gravitate towards this because they care a lot less about the high and low of the candle, although they do care. What they care about is where the attention was, to which price got the most attention in the candle, and was it on the buy or the sell side. So that's what we're seeking to evaluate. So when you look at these little red and green squigglies, or these lines, this histogram, I'm going to explain how why they're being displayed that way. But the bottom line is that when you see red, you're seeing a price level where the volume was dominant on the bid. And when you see green, you see a price level that was dominated on the offer. And the degree to which it was dominated gives you the color, or the intensity of the color. So if you see kind of like a bright, bright green, that means there was a lot of volume on the ask relative to the bid. If you see a kind of a darker green or a more muted green, middle of the road green, that is what means it was dominated less so by the offer or on the offer. Conversely, on the red side, if you see a very, very deep dark red, that is not so dominant on the bid side. If you see a very, very bright and vibrant red, that means there was a lot more volume done on the bid than on the offer. okay? And so what you're basically seeing is in real time as the candles are built, you're seeing where the price is being traded the most relative to the other price levels inside that candle. And you're also seeing in real time whether or not it's the bid or the offer that's getting hammered. And there are ways to reduce the amount of colors. There's lots of you can really simplify this. I left the candle displayed in the background because that way you can still see where the wick is. Okay, so when you're looking at a candle, for example, one like this, right here, you can still see that there's a giant wick here. So it's not like you lose what you normally would get out of a candlestick chart. You actually get a little bit more data. More data is not always good, all right? Sometimes it's bad, a lot of times it's bad, but in this case, this is what people are generally looking for, okay? And dominant, Arthur, means that, yes, like bid dominant or ask dominant. So bid dominant would be like a lot of selling compared to buying, okay? And then ask dominant would be a lot of buying compared to selling. And the degree to which it is dominant is what controls the color scheme. So the bright green, that is very, very bid dominant or ask dominant. If it's bright red, that's very, very bid dominant. All right. Okay. So that's the basic part of what we're seeing here. Now, other things that you see on the chart, there's a weekly volume profile, and then there's volume value area lines and basically the high and low. Okay, so these lines this is a huge range today, obviously in the NASDAQ, which was down 3.25% today. Unbelievable, go figure. So you have the volume value area high up here. You've got the volume value area low down here. You've got the low of the day, and then you've got the high of the day somewhere up here as well, way up here. Okay, and then this thing here is called the countdown timer. Okay, the reason I have the countdown timer going is because when you're looking at a chart that's on this short of a time frame, a lot of times you might be looking to take a trade based on the close of the bar. And it's a really easy way to keep track of where you're at in terms of time. Down here, you've got what's called the numbers bars calculated values study. Okay, this basically puts in number format a lot of the data that we see up here, except in aggregate for the candle. So for example, where you see this green positive 217 right here, this means that 217 more contracts were done on the ask than the bid. So it's the ask volume minus the bid volume. So if it's a positive number, it's green. If it's a red number, with a negative sign, that means there was more volume done on the bid, which is bearish compared to the offer. Now, just like I said in some of the other events, that is not enough information to make a system on. Okay, there are lots of situations where this number could be highly negative, and going short based on that number could end up with you getting your head ripped off in the next like 10 seconds. Okay, it's all this is an aggregate for the entire candle. All right, and then due to the introduction of another idea by another customer of ours who I don't think is here today, but his name is Tom, he brought up the idea of incorporating this minimum ask bid difference volume and the maximum ask volume minus bid volume difference. So basically what you're seeing here in these two rows is the minimum and the maximum value of this row inside that candle. So we incorporated this into this little system I'm going to display here in a minute. But basically, the idea here is like if this market went negative 1,000, okay, and then it went back to where it was only negative 500, it would say negative 1,000 here. Okay, so that would be the minimum value for the candle. If the maximum value was 800, but at the end of the bar, the delta was only 600, this row here would say 800. Right, so you're basically looking for like the outside range from high to low of the delta. And the reason why it's important is because the delta going from one end to another end inside of one bar can be telling. And we're going to demonstrate, why that is. Okay, so Arthur, for your question here, the 318, this means that the minimum delta in this bar was minus 318. And when it closed, it was only minus 313. Okay, so that doesn't mean that it recovered only 5 contracts at the last few seconds. It might have done that, but we can't tell that just by looking at this. All we can see here is that the minimum delta for that bar was minus 318. Okay, and that's the minimum value for the entire minute because this is a 1-minute chart. All right, it's not a custom study, David. No, this is not a custom study. All this is stock Sierra stuff. Okay. George, you can do the different colors for the candle, and you can outline the colors. The candlesticks can be green or red. Yes, I just made them black because, I don't know why. And then the point of control value is basically a fixed value that will only change when the point of control inside the bar changes. So the point of control in this context is the price at which the majority of the volume traded inside that bar. There's a reason I have this here. I'll explain what it is in a minute. It's kind of cool, but we'll touch on that in a few minutes. So that's the that's the numbers bars calculated value study. And then the only other studies that we have on here, I'll explain these two in a minute. We have the countdown timer, the numbers bars, that's the actual graph. The current price line is just a black line that goes up and down with the prices. You can see it kind of right here. Okay, that's only there because when you don't have the candlesticks, it can be kind of hard visually to see where the price is. So that's why that's there. I'll touch on these two in a minute. Numbers bars, calculated values, that's the table at the bottom. The volume value area lines, that is the this red line down here, and the volume value area high, I think, is way up here. Okay, that means that 70% of the volume is traded inside these levels here. The reason why that's important is because a lot of times you'll see a flurry of activity when the market breaks outside of its value area. That's something I've been following for a really long time. So that's the reason I have that up there. And then you've got the daily open, high, low, close, which is basically showing the high and low of the day. Automatic trend lines is a study that Sierra made a long time ago. I haven't talked about it in a while, but it basically is this downward trend line here and then this upward trend line. So what it does is it automatically draws trend lines, and then you can tell it to reset after a fixed number of bars. So in this example, after 5 bars, it will reset and draw new trend lines for me. It's kind of a neat study. It's a way to just not have to do as much manual work, and it's pretty good. I mean, it's drawing these lines by itself, okay? And then the volume by price study, which is the volume profile you see on the y-axis here. This is obviously not that useful on a Monday, but it's a weekly profile. Obviously on Monday it's a daily. It actually is in effect a daily profile. The reason why I put the weekly profile up here is because when the market breaks out of the profile range late in the week, like a Wednesday, Thursday, Friday, that is usually very meaningful. It means there's usually gonna be heavy volume. There's gonna be a lot of movement. Order flow traders really like that. Okay, they're looking for volatility. So if you're looking at the market breaking out of the bottom of the profile or the top of the profile, late in the week, like up here or way down here, that is usually a very meaningful event. All right, at least in the context of you're going to see a flurry of activity. So that's one of the reasons I like that. Another thing that a lot of volume profile traders like is they like to look for areas of very low or high volume. Okay, sometimes people are looking for different ways to think about support and resistance, and a lot of times people will use these high volume areas as support or resistance levels. A lot of interest took place at this price. A lot of interest took place at this price. Not very much interest took place here. And so what traders are often looking for is they're looking for markets to rip through areas of very low interest, like the 6640 level on the NASDAQ. All right, so that's one of the reasons I keep the profile here. The profile is less useful, in my opinion, on a Monday than it is on a Wednesday or Thursday, because that's when when that profile gets broken to the up or downside. That's when things are usually getting really wild. All right. Okay. All right. So I know I'm talking fast here. It's a lot to get through, and I apologize for that. We will take as many questions as we can as well. So please do feel free to ask. All right, so now let's get to some of the studies. So Tom's not here, which I'm kind of disappointed because I was hoping he was going to, give me some feedback. But my results tracking what Tom was looking for were mixed. Here is what we had discussed. Now we're going to scroll back in time, and we're going to see some blue like that, and we're going to see some red. Okay, let me look for a red one. There's a red one. Okay, so what we were doing with the min-max delta was we were looking for the delta to reach a certain negative or positive threshold and then close in the other direction. So imagine this, okay? Picture this. Don't look at the chart for a minute. Just picture this, right? Picture a bar that has a really negative delta, like negative, 500. But then it closes with a positive delta. So the market's getting hammered on the bid, sell, 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 huge negative number. But then the market closes with a positive number. All right, what does that tell you about the action in the bar? All right, what the idea, theory, is that it indicates rejection in the same way that a large wick on a candle might in some cases, right? And so what we're basically looking for with this study is a way to pick a top or bottom, which in this business is very difficult to do. And I have gained some thoughts since the last week because I have been looking at this, frequently, and I've realized that just like a lot of other things, it's not quite as simple as it seems. Okay, with the benefit of hindsight, there are some really obvious shorts and longs, but there are plenty. You saw me scroll through a few of them on the blue side that they're not great long signals. There's a lot of this is kind of like a gray box thing. There's a lot of inputs. We have to tell the program what to look for. So the data that it spits out is only going to be as good as the data that we put in, right? So we're going to have to evaluate that a little bit. I really would be interested in the feedback that that anyone here might provide. But let's talk through about what this is doing. Okay, I'm going to right click and go to studies, and we're going to be looking for this long and short study. So these are really just the color background based on alert condition studies that you see me use a lot. I just renamed them so that I could clearly see what I'm looking at. So the way you can rename a study is if you go to the settings section for the study and you see this short name here, you could just type in a name. So it'll put whatever name you type in this field, but it'll still put the original name of the study after. So if I were to add a moving average simple and then call it, PJ's rock and roll moving average, it would say PJ's rock and roll moving average and then moving average simple right after. So if you want to customize the names because it makes it easier to pick, to select what you're looking for, you can do that from that area. So let's look at the condition that is generating this cell here, okay? So in the alerts tab, you're going to see what appears to be some gobbledygook, okay? So what I will tell everybody who has never seen this sort of syntax is don't be intimidated, okay? Don't be intimidated. It's really simple. It looks a lot more complicated than it is. It is not a difficult to learn how to do this sort of thing. It's basically a bunch of greater than, less than signs, and you have to make sure you have the right number of parentheses like you did when you were learning algebra. All right, if you can get through that idea, and remember that I'm not a programmer or developer by any stretch of the imagination, you can do it too. All right, so here's basically what we were looking for. So every study has an ID number and a subgraph number. So the way that we refer to bits and pieces of a study is by looking for the ID number and the subgraph. So see how we see ID1.sg1 here? Well, what we're looking for is ID number 1 in this list, okay, which in this case, it's the numbers bars calculated values study. And if in the settings section, if you look at subgraphs, you'll see that every one of these studies has a bunch of subgraphs, SG1, SG2, SG3, all the way down to, in this case, SG50 something. Most indicators, thankfully, don't have 50 subgraphs. A MACD might have 4, right? MACD, the moving average of the MACD, the differential, and the zero line. Moving average will have 1, just the moving average. Some of the more complex studies in Sierra have additional subgraphs, lots of them. In this case, this is one of them. So what we're basically looking for in this situation is the difference, the ask volume, bid volume difference. In other words, the delta, just like we were talking about. So if we go back to that condition and we look here, what are we first looking for? All right, this is the first condition. You can see that these conditions are separated by a comma, and there's 2 of them in the parentheses. That's why we have the word and in front. When you use and then you open a parentheses, you're basically saying that everything inside the parentheses has to be true in order for the condition to be true. So here's the first part of the condition. It's that the delta, okay, the delta, which is ID1.sg1, okay, see that? Has got to be less than 90% of the same study except subgraph number 9. So what was subgraph number 9? Well, if we go back to numbers bars calculated values, let me just squeeze this over here, we can see that the minimum is SG9. So the minimum is SG9 and the maximum for future reference is SG8. So in this example, what we are basically looking for is we are looking for the final value of that delta to be less than or equal to 90% of the minimum number. In other words, if we look here, we want to make sure that the actual close value, which is minus 51, has to be 90% of what the minimum was. So in effect, the delta is closing near the lowest it was in that whole bar. All right, the other part of the condition is that the maximum value has to be greater than 100 in this case. So you can see that the value here is 136. So both conditions are satisfied. All right, the first part of the condition is that this number, this closing value, has got to be 90% of this minimum value. And the maximum value has to be greater than 100. Now that 100 is hard-coded into the system. We could easily change that. Watch what happens when I change this to 200. Okay, what do we think is going to happen when I push apply? All right, this value is 136. All right, I'm making the new condition say 200. I push apply. The condition goes away. It's no longer true. Because it's only going to give us a result now if this max value was greater than 200 contracts. But I only had it set to 100 before, which is why it was giving us a true condition, a true output. So one of the cool things that exists within Sierra is the ability for people to think about a condition like in English, like you're just actually thinking about, here's what I would like to see. Sierra can probably code it for you using something like this that really is not coding at all. It's just Excel-based syntax. So what we're basically looking for in this situation is for the market to have gone up to the point where the maximum delta was significantly positive by the NASDAQ standard, but closed near the low in terms of the delta. So you're looking for rejection at the top, and now the market is coming down, and this delta is almost as negative as it's been the entire bar. So Lori, a couple other people had mentioned looking for reversals. That's exactly right. So what's the major variable in something like this? It is largely going to be this percentage. Okay, how strict do you want it to be? Do you want it to be 90% of the low? Do you want it to be the low? Okay, do you want it to be 80%? Obviously, if you loosen this number up, you're going to get more signals. Maybe some good, maybe some bad. Okay, another variable is what is the delta required to the upside? So if the market starts rallying, but it doesn't quite get the delta we're looking for on the upside, we might miss a really, really great short signal, right? So that's what we're looking for in this example. Okay, let's just go to the long example. Okay, let's just look for the first blue bar we see. Okay, so here's another blue one. So here what we have is the closing value of the delta at positive 36, the maximum value of the delta at 39, and the minimum delta at minus 127. So let's look at the conditions. Okay, here's the conditions. So the closing delta has to be 90% of the maximum, which it is in this case. 36 is in the 90th percentile of 39. And the minimum number has got to be less than negative 100. In this case, it's negative 127. So this condition is satisfied. All right, what it basically is telling us is that this bar went negative, the delta went lower, but it recovered to the point where when it closed, the maximum delta, the closing delta was at least 90% of the highest it had been in that bar. So that is what our condition is looking for. Therefore, that's the result we're seeing on the chart. That doesn't mean necessarily that this is always a good condition. There is obviously, just like anything else, it's very circumstantial. One thing that I have noticed is that, like on a day like this, where the market is breaking, lower. I mean, at 12:45 when this signal came, roughly 12:45, this market had obviously already been getting hammered, right? So this is a situation where you can almost feel all these people who are long trying to get themselves out, praying that this was going to be their reversal point, and then all of their hopes and dreams being shattered as the market then continued to fall lower. So one way that you could interpret this in a circumstantial way is to look at it in the broader context of the day. So if we're seeing a significantly lower day and you see the market starting to rally and you think that there's a good chance that this is a failed rally, this is something that could act as a confirming indicator for you. All right, that is an example of like how you could actually use something like this. All right, it might also mean if you're trading the NASDAQ and you know the Nasdaq's down 3% already, you just don't take any longs, okay? Because you're not that good, right, at picking the bottom. But just like anything else, you got to be nimble, and you have this can't be the only plan. It's got to work in terms of a larger plan. But the fact that you can do some of this stuff inside this program without having to buy, a lot of add-ons, or in this case, any add-ons, is pretty, to me, it's pretty cool. All right, let's flip over to the S&P real quick, just for some similar stuff. All right, there's also these little dots. I'm going to explain what they are in a minute, but they're the ones that happen after the close like this. They're really not that important. I would like to show you some other ones, but let's go back. So we're going to see some red and blue. Now, these ones have slightly different hard-coded numbers in terms of those deltas, because 100 contracts in the S&P is not enough. All right, and look how much bigger the numbers in the deltas are here. So if we go to this one here and we look at the long, all right, it's the same formula. All right, we need the final delta, which is this value, to be greater than or equal to 90% of the maximum, which was 667. So 636 is going to be in the 90th percentile of 667. And the negative delta, the maximum negative delta, was minus 637. In this case, I have negative 500 as my threshold. So this is an example of this condition being reached, right? If we look for a negative one, let's look for another negative one. Oh, this is only going back 2,000 bars, I believe. Okay, there we go. Here's another negative one. So here's one to the other side. Okay, so you've got the closing delta to be minus 161, the minimum to be 165, negative 165, and the positive to be 1167. So this is a good example of rejection up here. I mean, look at the market runs up. There's a huge amount of buying right up here, probably because someone either had too much pain, or maybe they were short and there was like some short covering that occurred here. So they're buying back all these contracts. All right, and then the market then proceeds lower and closes near its lowest minimum delta. All right, it's a pretty cool idea. I mean, you got to be careful on a short time frame about getting whipsawed on anything. But this is, to me, a pretty neat idea. Arthur says, what was the reason to use 500 as the number? It's arbitrary. I've been playing around with it all week. So I don't have a perfect number to put there. I wanted to put something that represented kind of a multiple of the volume the Nasdaq trades. You probably could have used 1,000 in that case, because the S&P trades, in this example, or today it's 10. Actually, it's 10 times the volume of the Nasdaq, or is it 10? No, not 10 times. About maybe 1.5 times the volume. So I just wanted to pick a number that was reflective of the fact that the S&P has a lot more participation overall. Okay. Now, a couple other things that I wanted to talk about. Every now and then you're seeing these little magenta dots, or the blue dots. Like here's another one right here. What I did was I added another condition using the color bar based on alert condition study. So that's this one here. And basically what this is doing is this is showing the point of control. We're seeing a notification when the point of control is the low or the high of the bar. So in the case of the point of control being the high of the bar, then we're basically looking for this point of control value, which is down here in the numbers bars calculated value study. It happens to be subgraph number 42. I'm not going to go there just because you can believe me that that's the right number. But ID1.SG42 equals the high of the bar. So if the point of control value is the high, then we're getting this little magenta point. And it is kind of cool. I mean, you will see in lots of situations, like, did I just skip past a really good one I wanted to show you? You'll see this in a lot of situations, like right here, where the market, what this is doing here is the market coming down and a huge amount of volume trading. Now this doesn't look like it here because this is not measuring volume like a volume profile. It's measuring the delta. Okay, it's measuring delta. It's not measuring the number of contracts traded. So just because this is a low histogram value, that doesn't mean that this was not widely participated in. It just means the bid-ask delta wasn't very big. All right, but in this case here, the point of control was indeed the low price. So a lot of times what you'll see is you will see reversals when the point of control is the high or low of the bar. That's another reason why I wanted the countdown timer up here, because I'd be looking at the chart and I'm seeing the bar close, and all of a sudden this dot shows, and you're seeing, at the close of the bar, you're seeing this dot show up, and a lot of times you will see the follow through when the point of control is at the very end of one side. That just means that the majority of the activity, the majority of the volume that traded took place at the high or low. I mean, you could see why that would be interesting. All right. What I meant earlier about a lot of these data points being relatively useless after the close is that there's just not as much activity. So you're seeing a lot of these things happen at the end of the day here. I would probably disregard, that. Okay. But in the middle of the day, I mean, you'll see a lot of situations. Here's another one right here. Okay. This is an example of where the point of control is the high of the bar. All right. Arthur, those black rectangles are wicks. Are those dynamically forming candles for each minute in real time? You see them as well. Yes, that's true. So you actually are seeing both the profile build based on delta as well as the candlestick form in real time. So there's a lot of data that is being displayed in this format. Let's go back to the NASDAQ here just for a second. This one, I did not see as many situations where that point of control indicator yielded much. It's happening a lot after the close here because there's just not as much going on. Because of how volatile and sporadic the volume is on the NASDAQ, I did not see a lot of situations where the point of control was actually the high or the low. In fact, I'm not really seeing any here. And I just think that's because there's so little volume that it's not like you're seeing a situation where maybe an automated trading program is putting in 1,000 lot order every 5 seconds, like you might see in a more liquid market like the S&P 500, or what we hear a lot in, you may have heard like iceberg style orders, or where computer programs or algorithms are feeding like small quantities in little by little so that nobody can see that they're trying to put 1,000 on, so they're putting in a whole bunch of 10 lots or different quantities, so it's not as detectable, I guess you would say. That's not something you're going to see, I think, as much in the NASDAQ, just because it's just not as liquid. It's definitely tradable and it's trading a lot of volume, but you don't see the same bid-ask order depth. And so you're not going to see huge amounts of volume relative to other prices in the same bar, except for more rare circumstances. Okay. Yeah, it is kind of like an X-ray of each candle. I mean, that's definitely true. And that's what I want to also use that word of caution again, because it is a lot of information. I mean, it really is a lot of information on this screen. It almost goes against, some of the other presentations I've done where, I try to focus on less information. I really would want to caution, people against trying to, make this the only way they look at things. I mean, there are ways to scale back the amount of data we see here. We could take a lot of the stuff off. You could put your other indicators that you typically use and just use this as like a little bit of a confirming thing. The other thing that I wanted to mention is this tick on the right here. So the tick NYSE, I have the tick and NASDAQ here from the NASDAQ screen. Another thing that a lot of times people will look at is with the tick, particularly the tick NYSE, which is commonly used in trading education rooms and pretty much all over the place, is if you're looking for a reversal, you might be, how many people have heard of a phrase like a tick fade or a tick fade style trade? A lot of that is what they're talking about there is they're saying, okay, I'm looking for a reason the market is going to fall. One way to see that coming is if the tick goes dramatically positive. So if you have, let's say, a short signal coming through here, and you see the tick is breaching a relatively extreme level like 700, 800, 900 or 1,000, that is usually a value that is not sustained for very long. So if you see the tick at a very extreme level, unless we're in the middle of a rip your face off, kind of rally, a lot of times if people will incorporate a very large NYSE tick, they will equate that to a signal to go short if they've got a couple other reasons to do so. So for example, if you're in a situation where, like the point of control indicator pops up here, all right, so that means there's a huge amount of volume traded at the top of the candle, and all of a sudden the tick is blasting through this number, and you think that, okay, that's a good enough reason to be short. That would be, in this example, a reason to sell one, all right? Because what you're seeing is an overextension of buyers over sellers that usually is not sustained for very long before someone else steps in. All right, so the tick is a measure, for those of you who are unfamiliar, is a measure basically of how many stocks traded up versus down in the last unit of time. Okay, and so typically people are looking for numbers that are, 700, 600, 700, 800, 900, 1,000, 1,100 or 1,200 would be like extreme numbers. 1,000 would be a very extreme number as well. So incorporating the tick into something like this on a short term, I could see that being useful as like a confirming data point. So an example would be where if the market were to have rallied up here and you see some reasons to go short, like maybe you get one of those red bars or you get this pink dot, but the tick is not rallied up, where it doesn't show exuberation, it's not like crazy, then you may not go short there. Okay, that's an example of how that might work. All right. Back on the NQ, Arthur, at 1507. So 307, I assume you're talking about, let's see, was it right here? 1507? Oh, this one here, 1508. Was that like an algo gaming bottom? Look at the quantities and then the complete reversal there. I mean, what happened there? First off, that's 8 minutes after the close here. Remember, this is Central Time, so anything after 3 o'clock it can be really wacky. The other thing too is, remember, the quantities in the Nasdaq are, it only traded 250 or 740,000 contracts today, which is actually kind of a lot, but that order book thins out a lot after 3 o'clock. So it would not take a lot of muscle, so to speak, to move that market around after 3. Plus you got, I don't know if there's any earnings today or anything like that, but a lot of times, you'll see wacky things happen in the markets, and what could have happened there? That could easily have been, someone offloading a bunch of longs, or, we don't know. We just don't know. We can't see the direction of the trade. All we can see is, or the intent of the trader. All we can see is the execution, So, yeah, so if you were to look back, on another time and find something similar, this is a good way visually to do that, because, it's very easy to point out, when those situations occur. You get these distributions of delta, just like you get a distribution of a volume profile. So this is another, this is another example right here. This is not the same to the same extent, but, similar in ways where you get a huge amount of major bit differences in delta near the bottom of the candle. All right. Okay, so let's see. That covers both aspects of the study that I'm looking for here. Hang on 1 second. Okay. The other thing I wanted to mention too. Well, hang on a sec. Arthur says, yeah, Lori says most likely an institution closing a position at the end of the day. Yes, that's certainly possible. Yeah, 100%. And then Arthur says, see, here's a question. It's blue and it didn't rise. Well, yeah, that's true. That's the whole point of this is to say that this is not this is not the answer to all of our issues, Arthur. There's going to be plenty of situations where this could fake you out. And, like I said earlier today, you could probably look at this day and say, when you see a situation like this could be people getting sucked in as well. This could be a trap. And when the Nasdaq is up, or down 3%, there are a lot of reasons to not take longs, right? So this might be one of those days. But it's not simple. I had to play around a lot with the quantities. I never found a perfect situation. You don't really want to optimize the system that way, because you're incorporating confirmation bias, and you got to be careful with that. I think that the idea is to use a reasonable theory with reasonable values, and then look for ways where you can fine tune the bad stuff out of the picture, instead of curve fitting to the point where every system or every signal looked great over the last 24 hours. That's not going to yield something that can be used, I think, reliably going forward. Right. Right. Understood. So, folks, I think that's probably where we will leave it today. I mean, I think that next week, I don't know if I'm going to continue with the order flow stuff next week. Maybe we'll build on this a little bit. I mean, it was definitely interesting to get this min max delta concept. I had not really thought about incorporating that before, but I can see, again, kind of in plain English, how it's useful. I mean, you get a market that reaches one sort of negative level and then closes near the highs of that same bar. You can understand why that could be a good way to start to look for reversals if that's the way that you like to trade. But again, it's going to take some fine tuning. I welcome feedback, comments, questions. If anybody has any ideas they think we can incorporate, please by all means share that with us. Okay, we'd love to hear it. If you want a copy of the recording, go to our sort of sister website here. It's called chartingclub.com. Okay, chartingclub.com. Go to chartingclub.com and register here. It's free. It's not, associated with your account in any way. You just register. It'll send you like a temporary password you can change. We have all of our recordings and more posted here. Also, there's other people in my office who are building out this database as well with additional videos. So if you're interested in Sierra, if you're interested in this type of analysis and these sorts of explanations, then you're going to get all the stuff you're looking for inside chartingclub.com. So please do feel free to request that. If you want a copy of the files, just email me or your rep in our office, whoever it is, with a request asking for the files from the webinar today, which is Monday, November 19th, and we'll get them all out to you. And if you have a group of people, or if you've got other traders that you communicate with who you think might be interested in this kind of support, certainly we would appreciate the opportunity for a referral. That means a lot to us. Almost all of our business comes through word of mouth and trading rooms, and we don't think there are a lot of other companies out there in the brokerage business who care enough about their customers to do these sorts of presentations where someone with actual experience in seeing what people are good at and how they succeed and fail is willing to put these sorts of things on. It's a way for us to stay connected to you and hear what you're looking for and get questions answered and so on. So we really enjoy doing these, and it also forces us to learn. This is how we learn the program, is by being prodded and poked and people suggesting things and stuff they're picking up elsewhere. It goes a long way. So thanks again for being a part of the presentation. We appreciate all the questions and comments. If you are interested in copies of the files, just email me or email your rep in our office and we'll get everything to you. And you can work backwards off of it. You can tweak it, rename it, save it, put it in the garbage, whatever you want to do. All right. All right, folks. Thanks again for your time today. I appreciate it. I'm going to read some risk stuff one more time, and then we will get this up on Charting Club sometime tomorrow. If you are subscribed to that, you will get a notification. We also will have it up on YouTube. If you want to subscribe to Infinity's YouTube channel, just go to youtube.com/Infinity Futures and subscribe and get a notification on your phone or your email when we put up a new video as well. All right. All right, folks. Appreciate it. Thanks again for your time today. We'll see you next time. And happy Thanksgiving, everybody. Don't forget, we got early close Thursday. We're not going to be in the office. Friday is kind of a weird day. It's a half day. I think some of us will be here, handling questions and stuff until about 12 o'clock Central, give or take. But don't forget, we do have early closes in the second half of the week. All right. All right, folks. Thank you. Trading futures, options on futures, and retail off-exchange foreign currency transactions involve substantial risk of loss and is not suitable for all investors. You should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources. You may lose all or more of your initial investment. Opinions, market data, and recommendations can change at any time. Past performance is not indicative of future results. All righty. See you next time, everybody. Thank you for your time. Appreciate it.